Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So currently situation stands so that the major battlefield stands on the daily and the intraday charts. It's longer term charts on monthly, weekly, barely impacted by the recent price action. So market is just yet preparing for get out of these limits and showing some significant action on other time frames, on high time frames. Situation currently stands a bit tricky on the gold. What is about short-term trading. In the longer term, with the analysis of the fundamental background that we see this week, brings no really doubts to us concerning our long-term view. So mostly here we see absolutely the same reaction, absolutely the same response on the market, on the major information, major statistics, as on the euro currency. So as we said recently, in our Forex report yesterday, overall inflationary expectations are rising since long-term interest rates gradually is climbing higher after the announcement of the vaccine pack, as from the Pfizer, from the Moderna, AstraZeneca, from all producers. So interest rates start to rising. So currently expectations are more moderate. They are not showing this big performance. Interest rates, but what is interesting is that this performance is stable. So they're climbing not too fast, but stubbornly. And that is important. Gold market is supported by the weaker dollar and inflationary expectations, but it is depressed by changing of the sentiment and a new bullish cycle in global economy. And currently, we particularly could confirm that by looking on the gold action, we could confirm that indeed that might be the change in the sentiment. Because we have inflation, we have massive liquidity injections, we have weaker economy data that theoretically should be the backwind to the gold. We see the weaker dollar currently, but we do not see the bullish performance on the gold. And that just confirming that indeed it means that only one thing, that the sentiment is changing. You could just take a look at on the crude oil prices, for instance. It's climbing more than the 30% in just with a few months. So, an analyzing of this fundamental background makes us actually be confident with our view on the long term. In the short term, it's a bit some challenge to trade gold in the beginning of the week, and here is why. So on a daily chart, you could see that by recent performance on Friday, market has formed bullish grabber that stands in a contradiction to this one. This first moment, but also it is interesting to see what has happened on interest rates on Friday. Take a look. That's gold price. That's interest rates. Here's our grabber. This is grabber on gold market. Our grabber on interest rates has been perfectly completed. This market has jumped above 120, taking out of these lows and shows great performance. What we see on the gold? Gold shows no response to this action. Actually, it was held by some maybe intraday supports, by some other reasons, but it stands flat. Usually, gold market stands slightly behind the interest rates. It could be probably approximately on a daily chart around one session, maybe even a few hours. And with this jump on Friday, it's really could become the risk factor for the gold performance in the beginning of the next week, especially if interest rates will stay above the broken top without any fast pullback. If pullback will start, market starts dropping with a good pace to the downside, it will tell you that everything is okay, and you could try and take the long position in the gold market with this grabber that we've got here. But if market will stay above this area, this will be additional risk factor, a tricky moment that, the downward action could continue and gold could catch up with the interest rates reaching of the target of this grabber that actually also suggests taking out of these lows. Besides, we should not forget about the weekly situation when we have the OP target 1756, and with this collapse, it's also the bearish grabber on the gold market. So that's approximately the situation that we will appear in the beginning of the next week. How we could try to trade this stuff. So if you'll take a look at the hourly chart, you'll see that market stands at the support. So our XOP target that we have set on Friday has been reached perfectly. So head and shoulders that we traded from the Wednesday is completed precisely at the agreement support 1811, and we see strong upward pullback here. So you can see the momentum, the overall pace of this upward action is very strong. So since overall situation tends to be tricky, we need to minimize our potential risk, and that demands few moments. First of all, it's of course you need to keep an eye on interest rates. So they should be stable or better if we'll start dropping on Monday, returning back below 120 area. That will be just perfect. On the gold market, it would be better to take position as close to the previous lows as possible, because guys, this is actually the daily grabber, and we need to minimize risk. We need to take the position as close to the invalidation point as possible. So our stop of this trade anyway has to be just below this area, because drop below this area means the erasing of the grabber and the overall bullish context that we have. This is clear. So in this case, if market will show some deeper retracement, maybe ABCD pattern, that will be more or less acceptable background, because we have the grabber, interest rates, for instance, stand stable or gradually decreasing, market forming ABCD and currently steeple to buy pattern, and our risk will be very small. That's a potential risk if market will form something of that sort, as I drawn here on this chart. That will be the perfect scenario that I have imagined here to consider. I'm not sure about the real target of the grabber that suggests the taking out of this top, but at least if everything goes well, we could get some kind of the ABCD patch, and the market could retest neckline of the head and shoulders and 1835, 1838 fib level. So that could be the target that we could aim on if everything goes well. So that's approximately to keep an eye. If interest rates will keep climbing on Monday without any pullback, or gold will open too far from this invalidation point, it would be better to ignore this trade and watch for something else, because in both cases our risk will be more significant. If interest rates keep climbing, it will press on the gold and could lead to the further dropping on the gold market here. If conversely the gold will open too high, it will be too significant risk to manage this trade, and it will be not very attractive. So that's what we have currently on the gold, and well, let's see whether we'll be able to trade this trade or not.